So economic injury loans, the EIDL. The EIDL has over 3.6 million loans to date, and it's still open. It's got $190 billion worth of loans outstanding. And in Washington alone, we've got over 64,000 loans totaling $3.8 billion. So the EIDL, they have terms up to $150,000 plus a $10,000 grant. That grant is no longer available. That was automatic, and about a month ago or so, they stopped giving it out. So it's a $150,000 loan. It's got a 30-year term. I love this loan. It can be a little restricting in some points, but I love this loan. 30-year loan, 3.75%, 1 year deferred. When you do the math, it comes out to about $750 a month over 29 years, no prepayment penalty. And it's to be used for working capital for economic injury. So the economic injury, make sure that you're not crossing over with PPP. So if you've still got PPP money, make sure that you're not dipping into your EIDL money to pay PPP expenses. So use it for working capital, use it for other things, but don't use it for payroll, rent, utilities, interest. Make sure that you use it for working capital. This is really meant to get you through this economic injury and give you an additional source of capital, and a good source of capital, I might add. As I mentioned, $750 a month or so for about 29 years, no prepayment penalty, means you can pay it off at any point. So, which will be important because I don't know a lot of restaurant owners that are going to hold their restaurant for 30 years. So when you go to sell your restaurant, you'll need to pay this loan off with it. So it also carries no personal guarantee if it's less than $200,000. It does secure your assets, so you are going to want to talk to your bank about obtaining an EIDL loan. Most, if not all, will say that's perfectly fine. So it's not a cost preventative loan, but it does require them to work together a little bit more in some cases. So no personal guarantee, but it does put a security interest on your assets. So you do want to make sure that you inform your bank that you are going to take an EIDL loan.